Welcome back. Before we break down today's chart, this is strictly for educational purposes and is based on my personal professional experience. It is not financial advice or a live trade signal. Remember, the past performance doesn't guarantee future results, and all views are my own. Let's look at the data.
In case you were wondering, this orange and yellow line was the one that we were using from yesterday. I think it'll recognize it a bit and respond to it.
It's like it tried to be a 3 drives pattern, but didn't really proportionately make the third drive. A little bit of a, response to the area of the yellow and orange line, but not quite a full traditional response. So you can see that need to come back and attack the yellow and orange line from the underside. It's crazy that anybody that traded up to the orange and yellow line has a position that could be protected in the event that they manage it properly in a hypothetical situation. It's like, will they get the B point? At the end of the day, there's a chance that even with big retracements along the way, so being able to withstand all retracements because you have the best price and not giving it up to re-enter is key. Because if you don't have the ability to re-enter and manage the entire rest of the way, if you can only do some of it or a little bit of it, you're better off remaining in from the beginning and following the plan until the end. This entire chop being erased would be just like a paddle pattern, guys. Just like a fucking paddle pattern. Because this is fucking the easiest that it's ever been. Ever. So, good luck. So it's kind of like in a little inverse head and shoulders as well in the short term. Another test of the yellow and orange line, a deep retracement to add to the many that could come. There can only be one best price at a time. So the second chance on the right shoulder, if anyone took the right shoulder, then in a hypothetical situation, they'd be able to protect their trade with a stop and profit. And this movement did not change the best price, just to be clear. The best price was already readily available off of the 188.200. It was given again. Basically somebody can position themselves for pretty much the same trade with that move, and easily protected with decent ATR. Finally ended up running up to the typical 100% level that it usually likes to go to, the B point. And it could do it relatively quickly. It's over 100 points just in a matter of minutes. Will people be interested in doing it, or will they be disappointed with themselves at the end of the day? You could be really, really happy with yourself if you follow basic rules. Very, very, very happy with yourself, but instead there's the human inside that just maybe I'll be settle for less, maybe I'll do this, maybe I'll do something different instead of sticking to the rules. I may as well just do my own thing anyways. I don't know. It's at the end of the day, it's a harmonic pattern that we've seen, I think, over 1,000 times in the past year even. So that's just the reality of it. At the end of the day, we can see that, again, if anyone is in a position from anywhere remotely to the 188.200 in a hypothetical situation, you could protect your trade, make sure that you've paid yourself, and make sure that you're exposed to the pattern's play out point. The only way in retrospect to benefit from this is to be in from the beginning of the plan to the end of the plan. If you do anything else, you'll be paid less, and it's just not as good. And I don't know why you would want that ever. We have ample amount of time. Basically, I'm sitting here I just can't bear another day where everyone sees everything in front of them again and just does what? I'm like, what are they doing? It just goes in one ear and right out the other ear, I guess. Can't take a 100-point move. No fucking way I want to do that. No way can I do that. I can't pay myself that much. I'm fucking hell. It's just ridiculous. I'm so upset with it. Just the human. I'm I don't know. It's the worst thing within the trader is the thing that they were born with, It's like a deformity almost that they wish that they could change, but they can't. And I'm all it is basic discipline for rule following. That's all it is. Basic comprehension of rules and the ability to follow them. And the understanding of consequences if we don't. So I'm like, there's only one right way that the market can be moving at any given time. We could either be exposed to it or we couldn't be. We could be exposed against it as well. Those are the only options. Only options. And when we get into a trade that's got, a target of such a large distance away, sometimes when it gives us like 40, 50 points right off the open, right off the beginning of the plan, it's easy to protect because we've got an ample amount of profit to be able to utilize in the short term to be able to take advantage of. Like I said, if it did it 10 times before it reversed, are you just going to let every time come back to nothing and just like have it become a loss? So you're not going to protect your trade, not going to protect your profit, not going to protect anything in the short term. People that do that get hurt typically, because they don't have any awareness of what the value of protecting their profit is. And we know that longer term trades can be a series of smaller short term movements before they get going. And obviously one best price at any given time. So until they make another one, no new value has really been offered. People just settle for less on the pullbacks. And one best price to this movement remains, which is currently at the 188. Just remember the first indication on this area was to trade back up to the yellow and orange line. So if you'd done it properly, you would have a position below the orange and yellow line, not above, because that would be late. At the end of the day, we know that all movements that happened above could easily be protected, as every single time that it got above, there was like an ample amount of time to protect the trade. We know that just because we come below the 188-200, the B point above does not disappear. Does not disappear. From what I can see, they're working pretty hard to make sure that people don't have access to the B point above. At the end of the day, just awareness of the B point and the amount of value that there is in returning to it is key to understanding what to do if you're not in something. Obviously, no new best price has been made, so it's all down to managing the existing one. So we just connected with the downtrend. We can see no new best price has been formed still. It's just been deep retracements, like one of many, like I mentioned before. And how many have we had now? Does it feel like this is normal? It is normal. So we know that every time that it pops up, protecting the trade is the way to make it safe. Like to drag the stop in a profit is a way to make it safe. But we know that the 188 stands over 100 points just to get back to its B point, which it's related to, 164 points. So I'm like, if you have to drag your stop in a profit 3 or 4 times, it shouldn't be a negative thing. Like if you let it come down and hit your stop for a loss, that's retarded, and I don't agree with that. That's not what I ever talk about, ever. That's the terrible way to do it, and I don't agree with it, and I'm against that. And if it's not this trend break, but the next or the one after, it shouldn't matter. The one destination on this journey is the end of the pattern. So, I mean, regardless of how much it tries to get rid of the people that understand the pattern, those that have the ability to persist with it will be the ones that can benefit from it. That is the way. When we look back in retrospect, those that have the courage, the strength, the mental fortitude, the willpower, the understanding will be able to gauge that target because they understand it and be able to position themselves for it with a safe stop at profit and a easy, clear target. If you understand the plan wholeheartedly, like, is there any concept you don't understand? You don't understand the fact that we're in something like an 11 low zone that's like trying to pull back with deep retracements to get you out? Do you understand that the 188 is related to the 100 in this case, not any other time? I don't care about any other time. I'm talking about now. Do we know about the value of acquiring a position from the 188 to go to the 100? In this case, we can see it's over 160 points. And then what's funny is when we get to that 160 point B point, it will be in the middle, like insinuating that it could still go farther to get to places like the 61. Like, what are the odds we go all the way to the middle and don't even get to 61? And what are the odds when we go to the 61 that it doesn't fail and go to all-time high again? If you throw away your trade instead of managing it with a safe stop at profit, you will never be exposed to it, and maybe you can get back in from the middle, but then you'll be part of the next pullback. It's just like bad etiquette. It's really uncivilized. That's like unstable and fucking like, it reminds me of a crackhead. You know what I mean? Yeah, today's one of those days where it's absolutely like, if anyone's timid about it, then they really show themselves they don't understand. If they don't persist with it, then they show themselves they don't have persistence. If they don't stick with the trade, then they show themselves they don't have discipline. You know, they don't have patience if they don't get it to the target. You know, and I'm like, when you get it to the target, you prove to yourself that you have all those things and that you should continue. And if you have all of these things laid out in front of you and you still fuck it up, then I care to make sure that you don't fuck this up again. I'm like, God forbid. It is very, very interesting to me. Because I'm like at my rope's end with it. But nonetheless, it's an incredible thing, you know, when you think about the reality of technical analysis and how seeing a plan clearly before it happens, you know, we can see the value in positioning ourselves for that plan because we can see how clear it could be to get to where it's supposed to go technically. If we don't have an understanding of the market, then we won't know what makes sense. We won't be able to be in line with it. We won't be able to benefit from it. Instead, we just sit there twiddling our thumbs and waiting for something to happen to us, which is not what I teach. I teach you to understand and to be able to take action on what you understand, not anything but that. Make this trade, you do this thing right, you do this one thing right, like I said, all you need. The ability to read is more powerful than the ability to go back in time and change what you didn't know because you couldn't read. It's easier just to be able to read. There's no way that trading in here is anywhere as attractive as here. If I don't break it down, I don't know. And, you know, when I think about this little pullback here, maybe that's something that was relevant too. We're doing that now still. Oh. Yeah, geez, eh? That's really interesting that movement's still relevant. We're still kind of using it on the way up here too. I don't know why that's so relevant. And I already had this marked in for here before, but I didn't know it came back from over here. That's crazy. So that's sort of neat. And is there so much different from this triangle versus the other ones that we have had? I butchered it a little bit, but I don't think it's too far different. And making this parameter, I mean, that would be... So I actually like it more to the upside, funny enough, because that would get all the targets at the high, which are the harmonic B-point targets. So yes, I'm more inclined on bearish things failing in general because of the need to go up there, which is kind of crazy. I'm like, the need, eh? Well, they don't have to make it easy about when it does it, but I'll tell you one thing, returning back to a triangle so soon and not making this movement away at all yet is different. Like, when did we return back to a triangle so soon? We didn't return back there. We didn't return back here, really. Not much. And here we didn't care to return back. We cared to move away immediately this much as soon as we left the boundaries of the triangle. And right now we can see we're not doing that. We can see we're more interested in returning back to the triangle rather than moving this distance away immediately. So things have changed undeniably. Like, we can analyze that it's a fact that it is not being treated the way that these triangles were. Now I wonder if we're going to make even spikes on both sides, would it actually look even if we took this distance and instead of making it away, we could do it around the tip so that this distance on the bottom matched this distance on the top. And it would be a total of this distance that we usually like to make. And I'm curious about that. I find once we've finished that, to be able to get the B points would be the most attractive thing. Returning back to the tip of the triangle to make the same spike out of the other side would be the most technically favored movement at the moment from what I can see. You know, like, I wonder as well, like, what if the same movement that we did over here to get back to it is the movement that we're interested in making now? Like, oh, no, we'd have to go steeper. Interesting. Okay, well, I mean, it's not like it's not doing that. It's going steeper right now. It's getting those B points right now. We can see that the carry on was definitely something that was worthy of consideration. We got from the other side of the candle, like the other side of this triangle, And we totally have now pushed through the other side. We've totally created that other gap. We've totally knocked out that B point. We've totally knocked this out of the park. It's great. And there's one remaining B point to the upside. And also it is beyond the high of the triangle. So every downtrend on the screen had to break and has to break to get us to that B point, which has now happened. The blue line is also something that's very, very close to a 261. In the past, on the last one, 261, 188, we made a movement that was like this. Now, the irony of making that movement is that it would basically be the same thing. Like, we could even put this little, spike out of the bottom there and say, all right, let's say we did that. Let's measure that little spike out of the bottom there too. And is that a distance? Like when I say, let's see how the volume node concerns that spike out of the bottom. Would we say that that area right there is encompassed very well between this zone right here? That everything that we did in that area and this area is really, really contained within that zone. Now all of a sudden, the same components that crafted that consolidation in the first place are arising around a blue line that just so happens to give moves that are this big and this big when it interacts with it. What are the odds that interacting with it aren't going to create this kind of same sort of pullback that may or may not be that tad little bit larger on the bottom? So to me, what this means is if we make a consolidation on top of a consolidation, I mean, it's going to look like a freaking 5-wave move, ain't it? It's going to look like, well, I drew in that extra little bit because, I mean, that's usually what it would do. Like, what is this? Like, I didn't even intend for that. I just looked over here and I was like, well, hold on. It's kind of like that. It's not exactly like that. In order to get the same exposure that you would usually have in a 10-point candle marketplace, you have to widen your stop 3 times just to get the same amount of risk exposure to a candle. So if you have to widen your stop for 3 times the size in an area like that, how big should your position be? If the candles are 3 times the size, then they usually are, and you take the same amount of risk and the same amount of size, you have 3 times more likelihood of getting knocked out. Like, the chances of loss are 3 times as likely, and if you don't protect it, it could mean 3 times as large of a loss as what you're usually used to. And I would expect it to twist the knife and it to be even harder, for it to be even more than 3 times loss, for it to be even harsher on those people that don't understand that math. So over leveraging is a major thing. I find it very unlikely that in today's market that we're going to find things that they will relate to and repeat very regularly, but instead they will be used against them. Whatever does work very hard and very nicely is very likely to become a trap the next day or the day after.